Welcome, DeRosa family. It's Matt Faircloth. Welcome to the Cash Flow Digest. Like I said, my name is Matt. Our company is the DeRosa Group, and we are a real estate company dedicated to transforming lives through real estate because we believe that real estate brings change. All right, guys, we're going to be bringing in a guest now who's going to be talking to us about, guys, you can't own just real estate. You can't own just stocks. I forbid it. You cannot own just one investment vehicle, which is why it's important to have investment hedges and own things that just a little bit of everything so that you can have, what if this happens? What if that happens? And today's guest is going to talk us about the what ifs why we need to have precious metals in our investment portfolio. So to talk to us about precious metals, let us meet my newfound bestie, Michael Arries. Michael, how are you?
I'm good, Matt. How are you doing today?
Am I saying your last name right? Is it Aries?
It is Aries. Yeah, thanks for checking.
Are you an Aries as your sign? You're
I
probably like a
don't,
Leo or
I
something like
don't
that,
think
right?
so, but I don't even know for sure. So I don't even look at that stuff.
That'd be great. I don't either. It doesn't matter, right? It invented thousands of years ago and doesn't matter anymore, right? Yeah. So, Michael, for our audience, sorry, I'm
Mhm.
playful, man. So for our
Oh, you're
audience,
good.
please introduce yourself to us.
Yeah, well, I'm Michael Arries. I work for a precious metals company called McAlvany Precious Metals. They're a 50-year-old family-owned company out in Colorado, and we help folks invest in gold and silver, physical gold and silver, and do it strategically, and do it in a way where there's multiple entry and exit points. There's ways to compound ounces, and just kind of the best way to do it versus, oh, I'm going to buy gold and bury it in the backyard and forget about it. No, there's better ways to do it than that. But it.
Don't buy something like gold and bury it in your backyard and then forget and then get old and senile and forget where you put it, and then somebody will find it 200 years from now. Don't
It's
do that.
happened too many times.
True that, man. Yeah. Okay, so all right, Michael, let's start here in that. And my man Patrick, who's a friend of ours here at DeRosa, said, always hear about investing in gold, but tell us a bit about, let's even start about not the investment class side of it. We will get there. But like, what is owning precious metals? Why is it important? Talk us through it. You
Yeah.
introduced us to your company. Let's talk about the investment vehicle of precious metals. What is that? And
Yeah.
why should we even think about it?
Yeah, I mean that's a really good foundational point, Matt. Good question to start with because gold is money. So that's what we have to say. Gold is money. If you have a dollar bill in your wallet, you might say, "Oh, I've got money in my wallet," but you don't. The dollar is not money. When we use the
Mm-mm.
word money, money has to be a store of value. It has to maintain its purchasing power over time. So we can call the dollar a currency. We can trade it for goods. Gold also acts as a currency, but it is money because it's a store of value. It'll maintain its value over time. You can get it, buy some gold now, 100 years later, pull it up, and it buys the same amount of goods and services as it did previously in whatever those prices were and whatever that currency was.
Hmm.
So look at the last 20 years. Gold's gone from $300 an ounce to now over $2,000 an ounce. So regardless of inflation, if you had savings in gold, you can still buy the same amount of goods and services. If
Are you
20
saying, let me pause on that for a second.
Yeah.
Sorry to cut you off, but this is interesting and I want to
Mhm.
unpack that. And like I said, I'm chatty, right? So let's just go.
Yeah, you're good.
You're telling me that if I took whatever the weight is, so like
Mhm.
0.0001 of a ounce of gold,
Mhm.
that would buy me however many, let's make it up, grains,
Mhm.
pounds of grain or gallons of water or
Mhm.
gallons of
Yep.
gasoline or whatever it may be, or
Mhm.
gallons of a specific product,
And
gallons of milk, right?
yeah.
Whatever it is. So if I track that amount of gold,
Mhm.
that will always get me around that specific product. It'll buy me a cow, it'll
Mhm.
buy me
Yeah.
a, whatever it is, like so one little shekel of gold or whatever. So that tends to track with regards to the product that it'll purchase.
Basically, yes, Matt. Yeah.
Hmm,
So
that's interesting.
some of the examples you could have 1 ounce of gold, it'll buy you a year's worth of bread. You could buy a loaf of
Huh.
bread every day for 1 year. You can always do that on an ounce of gold, no
Huh.
matter what the price is.
And that's
And
been tracked back
Mhm.
through, like, I'm sure your company's been around a very
Mhm.
long time. 50 years
Yeah.
is very impressive.
Mhm.
So, but if I look at historical data, dare I say, going back into
Mhm.
the hundreds of years back,
Mhm.
1 ounce of gold has been able to buy about a year's worth of
Mhm.
bread
Yep.
looking back through time.
Yep. Yep. And even now with inflation the way it is, let's say you get like, a fancy, natural whole grain bread that's like $4 a loaf. You can still buy one every day on for a year on an ounce of gold. So
Oh
it
yeah,
it
yeah,
it
yeah.
still works. And then for
Fancy
for
pants
for
bread.
for
Yeah.
your wheelhouse for real estate, I need to look at it again. I feel like I've seen it be 200 ounces of gold. Usually you can buy a single family house on 200 ounces of gold. Maybe it's
Hmm.
between 150 and 200, but that's always been the same. Go back 100 years, same amount of gold buys a house. Today, same amount of gold buys a house.
Huh. That
So
is
it,
so guys, listen,
Mhm,
give this right here a
mhm,
like or an aha right now
mhm.
if that just blew your mind, because that blew my mind right there. And
Yeah,
whoa,
because what was a house?
Um,
What was a house 100 years ago? $10,000, $20,000.
yeah,
Yeah,
yeah, yeah, yeah.
but it's always been the same amount of gold. Gold is higher in price now, but same in purchasing power.
That is impressive. Okay,
Mhm,
thanks for letting me tangent you a little
mhm.
bit, but Kiko, so gold is really it's real money, right? Let's
It's
say
real money.
that's what you've said, and that's kind of the way you've
Mhm,
explained it, and that
mhm.
actually makes sense to me, right?
Yeah.
So why, as an investor, I get it, it's real money,
Mhm,
but why wouldn't I? Why do I need to own actual gold? Why can't I just own? Why can't I just own the thing and not the thing behind the thing, the gold,
mhm.
right? Like why? Like explain to me why, as an investor, it's important to actually be involved
Mhm.
in gold holding directly.
I mean, same with a house. Do you want to own the house or do you want to own a fund that owns a bunch of houses?
Right.
With owning physical gold, there's no counterparty risk. So that's your fancy term for your investors. No counterparty risk. There's no one else involved. If you own stocks, there's a counterparty. There's someone else that has to keep their promise for you to have value. If a management team tanks the company, your stock goes to zero. You get nothing. So with gold, nobody has to do anything. It has intrinsic value in and of itself. You have that wealth. You have that money. No one else is involved. No promise has to be kept. And that's it. So if you have a ETF or a fund, there's counterparty risk. You don't own the gold.
Yeah.
You're speculating on price, but having gold as part of your savings where it's real money instead of cash,
Yeah.
which is a currency, the way to do that is to own it physically. So it's yours, you own it, you control it. Whether it's
Yeah.
stored in an allocated storage account or whether you have it at home in a safe, that's real value in and of itself, and no one else has to do anything for that to have value, that gold and
But
silver.
but Michael, I'm going to keep yeah butting you,
Mhm.
right? Just
Yeah.
I'm going to pretend that I'm one of your clients that or whatnot, right? So, but
Mhm,
Michael, I could take, let's say I've got
mhm,
30K sitting in
mhm,
my savings account,
mhm,
right? Average Americans got less than that, but let's say somebody's got 30K sitting in their savings account, and it's in a high interest, bearing savings account,
mhm,
4%, whatever.
mhm,
And well, Michael, if I buy either your ETF or buy physical bars of gold, which on your
mhm,
math is going to buy me around 15 bars of gold, maybe 14 bars of gold or whatever it is
mhm,
for my safe. That doesn't put any money in my pocket. I don't get that interest
mhm,
rate of return that I do in
mhm,
my cushy little savings account that pays me 4% interest, right?
mhm,
Like, why would I want to go invest in gold when it doesn't like pay me a yield return
mhm,
as a investment like a savings account, or I want to go real estate, whatever it is? These things are producing real returns. An investment in a hard asset like gold, the perception is, and I know
mhm,
I'm kind of being neophyte, right? The perception is that it's not going to pay me a rate of return. What would you say to
mhm.
somebody that says that to you, or somebody that probably actually has said that
That
kind of thing to
that
you?
that certainly comes up. One, you've got the presupposition that 4% is a high rate of return. So,
Right.
that's something. Inflation is real world 20%. I mean, it's not what the government says. So if you're believing the CPI numbers, you got to start there and unwind your
Can't
thinking.
believe the
Yeah.
government, what
Yeah.
they
So
say about inflation.
yeah,
Hmm.
so if you've got, 4% interest, but inflation's 20%, you're losing money
Yeah.
big time. So that's your,
Sure.
that's your first thought. We got to change thinking a little bit. And then, beyond that, gold does give you a return. It's a growth asset. It's not paying you interest, it's not paying you a dividend, it's not a cash flow asset, but it's a growth asset. It's something where it goes up over time with inflation, but as it does that, it looks like it's growing in value, and it tends to have catch up periods over time where it will outpace inflation. It actually gives us more growth rather than just perfectly keeping up with inflation. So yeah, essentially you sell it for a higher price. You might buy a house for 100 grand, sell it for 300 grand, and you made additional capital on that, and minus taxes, minus inflation.
But why
Same,
would they
same with
sell?
gold.
To sell to what? To sell to like
Mhm,
a currency that if they're buying
mhm,
gold, they probably don't believe in the currency that
mhm,
it's really going to hold their value, right?
mhm.
So,
Yeah.
like my man Eric Platter just put out here, he bought gold, at $2,000 an ounce, and now it's at
Mhm,
2,300 an ounce. So he technically made $300.
mhm,
But if you're really of the gold psychology, and you're Eric here, why
Mhm.
would you sell
Mhm.
that ounce of gold to begin with, right? To
Yeah.
me, it's like a good place to hold it. And if God forbid you, like in case of emergency, break glass,
Mhm.
just like a savings account.
Mhm.
Savings account shouldn't be there to grow money.
Yeah.
Savings account should be there to kind of hold the money until you need it or just preserve it
Yeah.
somewhere.
Well, you're
It's
right about that, man. I mean, that essentially answers a lot of your questions. Gold is a long-term investment. Gold is long-term savings. It's a better
Mhm.
form of cash. It's a better form to have that longer
Yeah,
term savings, and it should just be part of your portfolio. Maybe it's
yeah,
10%, maybe it's 20%. I think less than
yeah,
10% is too little just because of how bad inflation is. Have some real money that is inflation proof, not just cash that's losing to inflation constantly. So any liquidity you have that you don't have a use for right away that is a long-term hold, yeah, your
yeah.
gold's a better form of money, a better form of cash for preserving the value of that saving. So yeah, as a long-term hold, great. So if you needed to use it, hopefully you can sell it when it's gone higher. And essentially too, Matt, the other point of this is it's in a bull market right now. It's been in a bull market since the early 2000s. It's in a dedicated uptrend. When
Mm,
that peaks out, and we know from every asset class throughout history, we know what the end of a bull market looks like. And we know what the end of a bull market looks like in gold. There's certain factors, certain ratios that come into play where it's like, okay, it's gone as high as it's going to go. Let's sell some. Let's take those gains off the table, put it into some
yeah.
other undervalued asset. Let's scale back on our exposure to gold. Right now, we need to scale up our exposure to gold because it's got a lot of catch up to do. It's going to go much higher to account for all the money we've printed. So let's have a good exposure to gold. At some point,
That alone
yeah,
is a good reason to own gold
yeah.
because the world is just getting caught up.
Mhm,
Not just the US, but
mhm,
with the amount of money the world printed. People
mhm.
don't talk about that. But
Yeah.
gold is a world asset. It's
Mhm,
not something that's limited to the United States, which is
mhm.
why people talk, throwing rocks at the dollar or whatever.
Yep.
We should be talking about more precious metals because precious metals are more of a world asset. It's the
Yeah.
one thing aside from crypto, which we'll get to in a minute,
Mhm,
but it's the one thing besides crypto that is a real world asset.
mhm.
Aside from dollars, yen, whatever, wherever we go as a currency, gold is
Mhm.
still going to be behind
Yeah.
whatever it is you got, right?
Yeah, and if
Well,
you're US focused in your thinking and our markets here, know that more than half of the demand for gold comes from India and China. So it doesn't matter if Americans are asleep at the wheel and don't get it yet because, we need to
they
go
will.
maybe through some harder times to start to wake up. Gold still has a huge market all around the world. You're always going to be able to sell it any day of the week.
Sure. Let's get to Patrick here. Do other precious metals outperform or underperform gold, such as,
Mhm,
and I'm sure your firm is not just a gold firm, right? Like it providing gold investments, right? Like
mhm,
at the end of the day, there's other stuff you can do in precious metal world. So
mhm,
tungsten, platinum. I
mhm,
wanted to I wanted to mention silver because I've also heard that silver, given like okay, I'll throw this scenario out here at
mhm,
you. That Michael, is that like if the you know what hit the you know what, right?
mhm. Yep.
That we all end up having to live off of gallons of water we got
Mhm,
stored in our basement.
mhm.
If I'm a prepper, right?
Yep. Yeah.
I'd much rather have silver nuggets or silver
Mhm,
tokens or even like
mhm,
quarters printed before 1964
mhm,
in my basement. I'd rather have those
mhm,
than little nuggets of gold because it is a smaller denominate.
mhm.
It's
It's
easier
more
to
barterable.
denominate.
Mhm.
What's that?
It's more barterable. It's better for
Thank you.
trade in that scenario, if we get
Yeah,
to
if you
that
want to
point.
comment on that briefly, but I
Mhm.
really to Patrick's question, I just
Yeah.
couldn't help myself to ask about people like holding
Yeah.
actual physical asset of gold
Mhm.
versus holding a
Yeah.
physical asset of small denomination silver because you could actually do something with that if you needed
Mhm.
to. Me
Yeah.
running around with a bar of gold saying like, "Hey, can I get a year's worth of gasoline with this thing?"
Don't don't
Like
don't take a hacksaw to your bar of gold. It's not gonna be good for you.
not gonna work. Yeah, yeah.
Yeah.
Your thoughts on things to hold in your safe, and then we'll
Mhm.
get to Patrick's question, please.
Yeah, yeah. Well, I mean, even including that question, when it comes to the precious metals, I would really just look at gold and silver as your main precious metals. Actually, bigger on silver than gold right now. I think silver is set to outperform gold and make a bigger move, and that'll be part of our strategy. We'll trade some of our silver back into gold later and get free ounces of gold at the right time as we watch the ratio between the two and how it performs compared to historically, we know kind of the turning points. So silver, I think, is going to do better for a time here, and I want to have more silver than gold. But silver and gold are the monetary metals. Those are your main precious metals that are an inflation hedge, that are real money. Silver has a lot of industrial demand, so a lot of it's been used up. It's more scarce. That's going to create, I think, a bigger pop for it. But those are the
Mhm.
main ones. In addition to gold and silver, you can kind of call platinum and palladium precious metals, but they
Mm.
have like a 90% industrial component and maybe 10% is a precious metals component. So, I usually would keep a pretty small allocation to platinum or palladium, and you kind of switch back and forth between the two. They go back and forth in the auto industry, which one is being used more. So, right now, platinum is the one that I think will make a catch up move higher, but maybe just have a small exposure to platinum, mainly have gold and silver as your precious metals. Tungsten,
Cool.
copper, anything else besides those is going to be an industrial metal and not a precious metal. So then you're looking at commodities, you're looking at economic performance, that sort of thing. But really what I'm focusing on is gold and silver
Mhm.
as wealth protection, as inflation hedge, as real money. So instead of having cash in the bank, I want to have gold and silver in my hand or in a storage account because that's a
Let
better
me
form
separate
of
those two.
savings. Mm,
I want to say it back
mm,
in like total Matt's layman's terms, right? I think it's what you just said is brilliant, and we need to underscore that that gold and silver are wealth holding metals that have been viewed as that for thousands
mm,
of years and will be
mm.
for the next thousands of years, right?
Yep.
Items like tungsten, platinum, copper, cobalt, whatever it is, name
Mm,
the thing, the other metals, you can certainly buy through ETF. You don't actually have to have like a piece of platinum sitting in your safe or a piece of titanium or whatever.
mm,
You could own them through an ETF action, but the what you're investing in is some sort of industrial application for that metal, and you
mm,
certainly could.
mm,
Maybe Nvidia is going to invent some new microchip that needs lots and lots of tungsten to function, right?
mm.
And if they do, then sure, tungsten is going to go in higher demand, and you're placing a commodity bet,
Yep.
right?
Yep.
But let's separate the two. Gold and silver are not commodity bets.
Mm,
They're not because of their scarcity. They're because of the world viewing them to hold value,
mm.
right?
Yep.
The tungsten, platinum, make the list of
Yeah.
all those other things are there because there is a chance that industry over time will
Mm.
need them more
And
to build stuff.
there's a component to that with silver. Half of the demand for silver is industrial. So the more China's adding solar panels, the more we're making electronics. That's all silver that's getting used up, and it's becoming more and more scarce. So there's a demand component for silver in industrial. There's an investment demand that is increasing as well, and that's making it more scarce and pushing the price up. But yeah, essentially with gold and silver, it's that the Fed printed too much money. They've devalued our currency. QE 10 years ago, that was a lot of money. But then since COVID, they printed tens of trillions more. And gold and
Mhm.
silver go up over time and account for all the extra currency out there. They usually, to some
Yeah,
extent, to some amount of M1 or M2, the measures of money supply, they will
yeah,
go up and account for that. And where we are now is nowhere near that. They can potentially go up several times higher from here to account for the money supply the same way they've done historically, to a similar amount
yeah.
to what they've done in the past.
Yeah. And by the way, both administrations printed
Mhm,
lots of money. I mean,
mhm.
this isn't like a Republican or Democrat thing.
It
This
is
is just
not.
what the US government has to do to pay its bills because of what what 30, 40 years worth of administrations have
Mhm.
built since
Yeah.
we went off the gold standard in the 70s, right?
Yep.
So
And it
this
doesn't
is
matter
something
who
that's
gets
now
elected this next time around, it's not gonna be fixed.
they're
We
going to
we s
print more gold. They're going to
Yeah.
print more money.
Mhm.
Doesn't matter.
Yep.
The way they go it, the answer will be print more money.
Mhm.
So, but going back to one thing, I wanted to touch on a few items here. Physical pieces of the metal
Mhm.
in my safe in my basement, ETF.
Mhm.
Meaning like owning a piece of the precious metal electronically
Mhm.
or owning the actual physical hard asset. Do you have a preference, or do you believe in both, or one or the other?
Definitely have a preference towards physical metals. Really, our thesis is you want to own it, you want to have it, you want to have full control over it, and then you get that wealth protection. It's not just
Yeah.
about that gold itself is, an inflation hedge, but also the fact that you own it, that it's only yours, that you can access it. So yeah, I prefer to own physical metals. If I have an ETF, maybe it'll be in a 401k where I can't, roll it to a precious metals IRA and I just want some exposure to the price of gold. But if I've
Yeah.
got an IRA I can roll over, if I've got cash in the bank, you can buy physical, fully allocated precious metals. It's either stored in your name or you have it at home. And that is my preference. That's what I advise my clients to have because, that that you've got control over. You're not going to
Let's
lose
unpack
that.
that for a second.
Mhm,
I can take my self-directed IRA, and we
mhm,
got a lot of people to
mhm.
take their self-directed IRAs and
Yep.
invest in real estate with it and whatnot. We do a lot of that.
Mhm,
But you're saying that I could take my self-directed IRA and go and buy
mhm,
a physical hard asset piece of gold, bag of silver, bar of silver, whatever,
mhm.
and keep it and hold it physically in my home as a preservation of wealth.
Not hold it at home. It has to be stored at a depository. But you
Okay.
can you can put your self-directed IRA into gold just like you can with real estate. You can put it in gold and silver and it's stored at a third-party depository since it's a
I see.
retirement account. Any
Yeah.
non-retirement account money, any private cash you have, we can ship you the gold, you can have it in your hand. And then retirement account money that would be held at a depository. But it's still physical
Mm.
precious metals that are there that we deliver there that only belong to you and same as if you had it in your hand. It's just
Hmm.
it's in a box held for you since it's an IRA. But yeah,
Yeah.
either of those things you can do that. And having that physically, that's just part of your safety net for your assets. You know, whatever percentage you want to put in gold for diversification, that's the part that never goes away or goes to zero. So it's, you know, what comfort level do you want to have to say, okay, you know, everything can collapse, but I've still got gold and silver and it's still money no matter what.
Yeah. 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 That's really interesting.
Mhm,
And if well, if everything collapsed, I'd want to have it in my safe
mhm,
versus at a third party, unless the third party depository is like, around the corner from my house or like at a in a I mean, could I do that, or does it have to be a third party? Could it be, close enough to my home that I could go get it if I needed it to, or does it
Uh,
have to be
there's
like
there's certain ones that we use that we trust that we know, and it has to go through the IRA custodian and be a distribution. You can't just go pick up your metals. So here's the thing, Matt. Having some metals at home for that sort of end of the world safety, great.
just in
Do
case?
do that. If you have an IRA, there's a tax advantage. There's no capital gains tax for the buying and selling within that. There's just income tax whenever you pull it out down the road. So there's a
Mm,
big tax advantage to having your IRA protected, to have it all invested, to have the growth in precious metals, have that all tax deferred, or if you have a Roth, have it be tax free. And then the strategy we employ when we trade metals back and forth, doing that in an IRA is a much better vehicle too. So there's tax and logistic advantages to the IRA, and then there's that kind of peace of mind when you have some at home, and so they both kind of
yeah.
play different roles.
Got it. I couldn't. I have to ask you
Mhm,
because there's a lot of people that use the same argument for precious metals about, like really the non reliability of today's U.S. currency,
mhm,
or that even like awful words like fiat currency, that kind of stuff, and
yeah.
and comparing where the U.S. is at right now to like early 30s Germany, where they were using like buckets of money to heat. I saw pictures of people using money to heat their house,
Yep.
like they would burn
Yeah.
bills in their fireplace because it was
Mhm,
cheaper to burn the bills than it would be to buy a log of wood to
mhm,
heat your home or to buy coal.
yeah.
But money by the pound became cheaper than coal,
Yeah,
if that makes sense.
they would print
Um,
so much cash. If you had a wheelbarrow full of cash, someone would push it over, dump out the cash, and steal the wheelbarrow. That was more valuable.
yeah, yeah, right, right. Now, people have used that same analogy
Mhm,
in comparison of talking about currencies and things like that to argue why one should consider crypto. Right?
mhm,
How do you compare a crypto investment to a precious metals investment? Because the thesis, some would say, is similar, if not the same,
mhm,
as an anti-dollar investment,
mhm.
right? I'm sure you've got an opinion on this, or a like a real like a real twist on this. But
Yeah.
how do you feel about the comparisons of crypto to
Mhm.
precious metals, and how do you compare a investment in crypto to an investment in precious metals?
Yeah, well, I'm definitely a big gold and silver guy. I've been kind of always into an alternate view of news and the economy and then just, having something tangible like gold and silver. So I'm big on that. I'm not because I'm a gold guy, I'm not going to be anti-crypto or say someone shouldn't have it. It has its place. But I don't think they're exactly the same or play the same role. And I don't think something like Bitcoin is a replacement for gold. So with cryptocurrencies, it's an alternative currency. Yeah, it processes faster. You can move money across the world in 5 seconds. Gold, you can't move it across the world in 5 seconds. It would take a couple weeks. So there's advantages to crypto, but it's an alternative currency to the dollar, not a store of value, not money, not wealth protection to me. The price movement is way too volatile to be that. Gold is a lot more stable. So I guess I would look at it as gold has 5,000-year track record of being money. No matter what empire or currency has come and gone, gold has been the fallback. Gold is still there.
Track it back.
Yeah, crypto's
They
got.
talk about it in the Bible and
Mhm,
before that,
yep,
I
yeah,
mean,
yeah.
the Egyptian empires, 4,000 years BC had gold was one of their primary assets.
Mhm.
Yeah.
Yep. Yeah.
Um,
I mean, every currency back then, whether it was the Greek drachma, the Hebrew shekel, I mean, it was gold or silver. That's why it was money, is because it was made out of that. So that
yeah,
that has the track record. That still performs well. I mean, just the last 100 years since we got a central bank, gold's gone up from $20 an ounce to $2,000 an ounce. So, that's what happens. It still happens in our modern age. With crypto, it's a number on a computer screen. It's digital. It doesn't exist in our world. So, will it be useful? Will it be valuable? Maybe, probably. But do I also want to have something that I can hold in my hand that is still valuable as money, even if the power went out? Yeah, I want to have some of that too. So,
yeah,
crypto is not a replacement for gold to me. I'm not saying don't buy crypto, but have both. Have some amount of your foundation in the
yeah.
one that has that long a track record.
It's hard to keep pieces of
Mm,
Bitcoin in your safe in your
mm.
basement.
Yes.
To the bottom line, what Michael's saying there,
Mm,
and then God forbid, you want to keep a couple gallons of water, a couple cans of food around, and
mm,
maybe a couple of pieces of gold or silver.
mm,
Crypto's great, but if the power, like Michael said, if the
mm.
power goes out, you can't get to it, right?
Yep.
So, Michael, this has been a great conversation. For
Mhm,
those that want to hear more about, that want to chat more with you about precious metals,
mhm,
or want to take some action and do some of the cool things, it
mhm,
sounds like your firm's actually able to ship these things, so you don't have to go and find
mhm,
some local fly by night pawn shop to
mhm,
sell to that's going to sell you bars of gold. It sounds like your firm's going to be able to give real valuations and able to support it and probably affordably transport that gold or silver
mhm,
investment to your home reliably and everything like that.
mhm.
So how do people connect with you to hear more about what your firm could do to help people diversify their wealth?
Yeah, really the best way is just call or text me. I like interacting with folks directly and helping them out one on one. So my direct phone number is 970-459-4611. Again,
Boom.
it's 970-459-4611. Call or text, and I'll be happy to answer any questions and kind of just tailor the strategy to your personal situation and what you're dealing with, what you've got, what your goals are. So,
There you go. If you
mm,
guys want to use the magic internet box to connect with Michael, there is a link there in the show notes from on all of our channels in
mm,
that. So, and then we're also posting your phone number there too, Michael. So,
mm,
Michael,
perfect.
this has been great, great, interesting, and very
Mm.
insightful. You blew my mind a few times today as well.
I'm
Thank you so
glad.
much for joining us in the Cash Flow Digest and then that. So, I'm going to pop you back in the green room, but I really appreciate you joining us today.
Well, thank you, man, for having me. It's a privilege. Love your show, and so thank you so much for letting me be here.
Thank you.
Mhm.
Great being here.